Right, I'm beautiful. How's it going? Quick video. Past the Topstep. Lovely stuff. That is my first ever funded futures account. So that's amazing. Passed it this week on Thursday. Yeah, lovely stuff. Very grateful for it. Before I get on to like how I did it and the trade that passed it, just want to quickly talk through where I've been. Like everyone, like anyone gives a fuck. But yeah, so I said in like my previous videos I was gonna like kind of post the transition of me picking up futures for the first time. Obviously I came from a forex background. I'm not starting fresh trading. I'm not transitioning. I still trade forex, but I'm just trading that hour and a half in New York market open. So yeah, I picked the futures and I said I was gonna like kind of document the process from just starting off to becoming consistently profitable and making fat payouts. And that kind of hasn't happened. I've made like 3 videos, and the reason I haven't done it is one, I've been so busy. I trade forex, I trade futures now, and I also have a business in AI automation, and that's been taking up a lot of my time, and I enjoy it. And yeah, that's been kind of the main reason. And two, I feel like obviously if you look at my past titles, like making X amount of dollars. Yeah, not the forex ones. The forex ones is actual real money withdrew to my bank, but the futures ones, again, I'm not lying. I have made that money. Well, I have made that money, but again, it's a challenge. I say that in the videos. I'm not like acting like I'm withdrawing that money. I'm very transparent. That is a challenge. But even thumbnailing it or like titling it, made fucking $2,000 day trading. Well, it's on a fucking challenge, mate. I didn't actually make shit. So I thought, right, you know what? Let me just pass this account first. Then once it's passed, I'll start making more. And once I have a bit more time, which I probably won't have, but I'll make the odd one. I'll make the odd like trade recap, breaking down how I trade, and yeah, just showcasing that. If I can help a couple of people, then yeah, happy days. So that's the crack. What I'm going to do on this video is break down, nothing exciting, just break down the trade that actually sealed the deal and passed the account. Here's my dashboard. Can I see the old account? No, I can't. But on the accounts, there's the past account, and now it's on my active account, which is an actual Express. Happy days, little 50k, lovely stuff, and let's break it down. So let's have a look at futures, close all these. It was on Thursday I took this trade. It was actually objectively a break-even trade, but I only needed $1,000 to pass the account, and this trade managed to do it. So let's take it back to Thursday. It was actually quite a clean day, but with the shittest delivery ever. So let me wheel it back to here. Let's put it back to market open, because I actually changed bias. I was actually kind of bullish off bias. I was kind of open, but I was a little bit bullish. So coming to the day on Tuesday, market opens. Oh, my keyboard's not on. So market opens for a fat candle to the downside. So what is happening here? Let me just mark up the open. So on the highs, what was my overall bias? My overall bias was actually leaning bullish initially. So if we go to the higher time frame, as you can see, we're overall in a bullish trend. What's happened here? Price manipulated a previous swing low, a previous range point. Price loves to manipulate these swing lows in continuation markets. So the market manipulated this low, and we've got a clear V-shaped recovery with bullish expectancy out of this zone. Now, if you look where price stalled from, it is a clear generation of liquidity. Price has pushed with volume to this area and stalled right at these highs. Price is generating liquidity at a low volume time of the year in order to induce people short, induce people into thinking the market has failed to create a new high, the market is bearish, the market is going to continue to retrace and manifest this break of structure, which is not a break of structure, it's a liquidity sweep, but many people will be seeing this as a break of structure. Therefore, we're generating liquidity here. People are short in the market, and it's going to be short-lived. We have that push to the downside almost validating that, and it's not the cleanest push. We don't exactly manipulate a key area, but we do have a jolt to the downside. And what's happened since then is you had a low in the market, And on the daily, as you can see, we're currently respecting a daily new week opening gap and fair value gap. But let me just go to the 4 hour quickly. And this is what I call, like I made the concept. This is what we call a Wyckoff reaccumulation. So price accumulates. This is just an accumulation of orders, a range accumulates orders. This is actually schematically a distribution, but we theory-wise we are accumulating orders here. Price is stacking highs, and this is what we call a Wyckoff reaccumulation schematic. We have a distribution phase where the market ranges, but then pushes to the downside before accumulating, doing the same thing, ranging but manipulating to the downside and breaking structure to the upside, showing signs of strength. That is a reaccumulation schematic, which is essentially a refuel. So when the market wants to push near or even take sometimes a key area, like sometimes we'll reaccumulate, which is essentially the market re-engineering liquidity in order to refuel for the next leg higher. So we do that here, we generate liquidity, we push to the downside, we manipulate lower, we break to the upside, showing signs of strength. Again, is it the cleanest reaccumulation I've ever seen? No, there's no major key area on the left. It would have been lovely if we maybe ran this low, but we didn't. There's no special fair value gap, but structurally we are overall bullish. We've had this kind of stall here, accumulated orders, we then manipulated to the downside, had a V-shaped recovery out of that, breaking structure to the upside, showing signs of strength and validating this reaccumulation schematic. This is Wyckoff, massive technical analysis from back in the day. And then fractally we see the same thing here. So we push higher from this manipulation and break, and what do we see? We see price reaccumulating. We have a push, a refuel before the continuation. So price is we've got a daily fair value gap and new week opening gap here. Price stalls, generates liquidity, manipulates the liquidity into the key level before having our volume out and continuing to the upside. So I'm overall bullish here. But what's happened, we actually ran our internal high with not much follow through. Quite an abrupt reaction to the downside. But again, I'm still overall bullish, and I'm expecting for price to, after running this high and not following through so much, to have a push to the downside, to manipulate structure, generate more fuel, generate more liquidity before continuing to the upside to our draw on liquidity, which is this stack of highs on the medium term. So coming into the market, this was the market open candle. So before the market opened, this fat candle wasn't there. I was actually quite bullish from the manipulation of the swing low. We have price overall bullish, breaking structure to the upside. This is the main swing point in the leg. This is the main liquidity point. This was another fractal reaccumulation, fairly strong. But the market, I was looking for the market to manipulate this low, manipulate a low to generate liquidity to continue to the upside. So off open, I was quite bullish. But what happened is price tapped into this 4 hour and rejected it very abruptly. And showed clear intention to the downside. So price manipulates this low, with a V shape. I'm expecting higher pricing. Price continues this bullish swing. So we manipulate the low, we push higher. We have a nice little range that gets manipulated here. Price continues higher on open. But open actually happens and we just get clear intention to the downside, breaking a potential protected low. Why is this a potential protected low, or maybe an anticipated protected low is a better way of putting it? Well, this low is the nearest and most significant structure point in this bullish leg. This low is fairly strong. This doesn't do anything. When price is stalling and failing to follow through a greater time frame break, we are likely going to push to the downside and refuel or manipulate a liquidity point. This structural liquidity is the clear candidate for that. We get that manipulation, but we don't get the follow through, and that low fails to continue us to the upside. Market open gives clear intention to the downside. You could be saying, oh, maybe it's just another sweep. But mate, we've clearly respected the 4 hour, shown clear intention to the downside, ran this kind of protected low, And then we look at ES, and ES is very clearly bearish at this point. Let me get rid of my markings, but we have a very similar story on ES with a nice bullish reaccumulation. But we have also ran our internal high, with draw being the external at all-time highs. But ES is more advanced in the fact that this structural liquidity has already been violated, and we have a very impulsive stab to the downside. This fair value gap has been inverted. This structural liquidity has been disrespected. We're in a retracement phase. What is the objective of a retracement phase? Well, generally it is to either rebalance or take liquidity. Price clearly has not respected this liquidity, clearly has not respected this rebalancement. What's next? Well, highly likely we will run the structural liquidity point to refuel and rebalance price before continuing to the upside. Therefore, when you see price, and also we have this, do we have a 4 hour here? I think we have a small, no, we actually don't, never mind. But when you see price with such an impulsive push to the downside, and we're in the retracement phase, it's very unlikely that we're just going to flip back bullish. Like we've clearly had a lot of sellers get involved at this high. We've not had follow through. We're not as strong. The bullish push has not had major momentum to continue us to the actual draw on liquidity being all-time high. It's highly likely we're going to smash through this low, then just reverse from nowhere. And I know you can say order block, load of shite, mate. We need to manipulate a structural point or rebalance a key area before we go higher. Has price done that here? No, it is clearly disrespected the rebalancement, inverting the gap, and just smashed through the structural low. So I'm thinking, okay, price is not going to magically just bounce higher from here. Price has not completed its retracement objective, and it will likely seek lower liquidity, being this low here. We have a very similar story with price manipulating this high pre-market. Lovely stuff. Now, so that has framed my short bias. We have clear intention to the downside on the Nasdaq, and the S&P 500 is showing that the draw is highly likely going to be lower. That is how I framed my bias. So now what's my draw on liquidity on the Nasdaq? Well, generally short-term structural lows, but if we are going to violate this low, respect this fair value gap and show intention to the downside with ES also showing clear bearish expectancy, what's next? Well, we're in the retracement phase. I'm overall bullish still, but I understand we're in a retracement phase. We're going to be short-term bearish. What is going to be the objective of that retracement phase? Well, it's going to be to either liquidate orders, sweep liquidity, or rebalance price. Where is the next zone where that would likely be achieved? Well, we have this here. Is our next structural liquidity point. This is the next swing low in the market that created a structural high in this overall bullish leg. Therefore, orders will be rested below here as stop losses reside below bullish structure in bullish trends. And this will be the next zone which can potentially fulfill our retracement objective that will rebalance price before continuing us to in its desired direction, being bullish. Therefore, my draw on liquidity becomes this low. We have alignment between the Nasdaq and the S&P, and I'm looking for a short. Now let me play price, another candle. Price continues to the downside and opens up a 15-minute fair value gap. This becomes my continuation zone to look for that short to these lower draws on liquidity. I'm dropped to 1 minute here, and as you can see, price has built a nice structural liquidity point just beneath our 15-minute fair value gap. This will be the continuation zone which I'd like to see manipulated before that continuation in our desired direction. Because here, price, we have a draw on liquidity lower. We have overall strong structure. I think this high will make a new structural low. Or I say structural low, I think this high will complete the retracement objective of running that structural liquidity. Then, in order to achieve that, we have a continuation zone, which is a 15-minute fair value gap, and we have structural liquidity here. So price will achieve manipulation and rebalancement when it comes up here to continue us to the downside. Let me just fast forward price here, so we manipulate, and we do not get an instantaneous reaction by any means, But here, in this range, we're making consistent SMTs, where the Nasdaq is making new highs, the S&P is not. And also, and more importantly, look where we are on the left. The S&P has ran the pre-market high. The Nasdaq has not ran the pre-market high. So we have a massive structural SMT here, showing massive weakness on the Nasdaq. The ES is also aligned bearish, but NAS is clearly displaying itself as the more bearish asset. We're still rejecting this 50-minute at this point, which doesn't last for long. But as of right now, we're getting massive structural SMT at our key level, which is a beautiful confluence. At this point, I'm looking for the highest time frame inversion in this manipulation leg. The leg which pushed us into our key area, which we're expecting reversal from. I'm going to move the S&P to here just because it looks nicer. That just looks stupid. And I'm looking at this 5-minute fair value gap to get inverted, because this is the highest time frame fair value gap in this leg that pushed us into our key area. I'm looking for a body closure beneath this fair value gap. But firstly, price pushes into the fair value gap, and I'm just still monitoring on a lower time frame as we're doing this, still with the intention of taking a 5-minute inversion. But what happens here? This is another one of my models. So price taps into the bullish key level. Why is it a bullish key level? Because obviously if price was going to go to the upside, this is the bullish fair value gap that would continue price. But we're looking for the disrespect of this key level to see a break of order flow to validate a bearish bias to take the shorts. Am I explaining this good? I may be going a bit quick. Apologies if I've lost you. So yeah, we push into this bullish PD array, and we get quite an explosive reaction to the upside. So this is holding as a bullish zone. We're not getting that inversion, or again, initially, we're not getting that inversion I was actually anticipating. This is what I call a pop-up, pop-down schematic. Bit of a weird word, but I've called it that for a long time, where essentially you have a bullish key level, or again, it doesn't have to be bullish. You have a key level, an opposing key level. So I'm looking to short, and it's a bullish key level. When the opposing key level gives a push, but the push fails to fulfill the desired expectancy, and we get popped down. I've explained that so badly. So essentially, right, here, I'm looking for a short. We got a bullish key level. The bullish key level gives a bullish push, but this is a false push that does not fulfill the desired bullish EOF. EOF standard for expectation or order flow. What I mean by that is, obviously, the bullish key level, what's the expectancy? What's his job? Well, in a bullish trend, this bullish key level is going to make a higher high. It's going to make a lower low and a higher high. But a pop down, this schematic I'm talking about is when a bullish key level does that, but fails to fulfill the order flow, given a failure to creating weak structure that we use to then short. So what happens here is price has this big push up from the bullish from the bullish fair value gap, but we failed to create a new high. Again, at this point we haven't failed anything. This is normal bullish price action. But what we have here is we have ES manipulate this high and show signs of rejection, whereas the Nasdaq does not take the high, given an internal SMT. Then in this leg, we open up a big fat 3-minute fair value gap. Fractally, if this bullish leg is to fulfill its expectation or order flow of creating a new high, we should respect this fair value gap and continue to the upside. But what actually happens is price, with clear volume and intention, push it to the downside, and we get a 3-minute closure, a clear V-shaped fair value gap closing below here. So now we have many confluences. We have our overall bearish bias on the Nasdaq and the S&P 500. We have a bearish key level of a 50-minute fair value gap and a nice little 1 minute structural liquidity pool. We have internal SMT, external SMT. Then we have price push down into our opposing key level, give a pop to the upside, which fails to create a new high, gives an internal SMT. Then we get an inversion within that leg. There's clear bearish intention here. So I go short. Stop loss above this 3-minute candle. Take profit. You could have targeted down here. In real time, I was actually just targeting this new low. My break-even point being this low here, which is the low that had a pop up from our bullish key level but failed to create a new high. As it failed to create a new high, it becomes weak. So I take the trade here, get a nice push to the downside, and my TP was about here. Why was it here? Again, normally it'd actually been a break-even trade, but this is my break-even point. I moved stop loss to break-even, but I TP'd here because I only needed $1,000 to pass my 50k account. It was a $3,000 profit target, and I was already up $2,000 from trades in the month before. So I ended up hitting my profit target by here. I only did a 1-to-1, but if it was a if it was that wasn't the case and I was just in a trade, I'd have been targeted here or here, and my stop loss would have moved to break even when we break the weak structure or the low that failed to create a new high. And price ends up having terrible delivery and just chops about for the whole entire session. Really, really poor price action. But that is the kind of the thesis of the trade. Nice, it would have been a break even, but very nice to pass the account on the first week back of January. Lovely stuff, big year ahead. As you can probably tell, I got a fair bit of knowledge when it comes to technical analysis. I've been doing this for 4 years now on Forex. Again, with futures, I haven't been doing it a year. Futures, I'm still new, but a lot of the stuff copies over, and I understand what I'm doing from a technical perspective. All I need to do is really focus on the psychological aspect. I've kind of honed that in on Forex, but futures is a different game because I'm entering like the 1 minute time frame. Forex is the 15, the half hour. It's the higher time frames. I have a lot more time to adapt and kind of think things through. Whereas futures is really got to make the decision there and there. There and there, is that a saying? So yeah, it's a bit different. I got psychological work to do. I know for a while I could blow this account. Like I'm not by no means I'm thinking, yeah, I've mastered the skill of futures and I'm ready to make bloody 100k in payouts. No, not where I'm at yet. But I have no doubt that I will get there, and I will make some silly money trading these futures markets. I enjoy it, and I'm very grateful for everything, and yeah, I'm looking forward to it. So yeah, gonna keep disciplined, keep working, stay focused, and hopefully can make some nice little payouts on this 50k. Again, nothing crazy, and then we can scale up big time. What will be next will likely be this. I pass this account nice and slow. Like as you might be thinking like, oh, it's a valuation, who cares? Everyone passes evaluations. I pass it like kind of properly. Like I took my time and I took proper trades. Most people don't do that. And I did that mainly to prove the concept. Again, I could just full put the evaluations, but I wanted to, for the first one, to prove the concept and trade properly and follow my plan, which I did, and I passed it. I blew some before I passed it, by the way, just from psychological issues. And yeah, so I've kind of done that now. Next, once I get payouts on this, I likely won't pass them so legitimately. I'll probably just full port them because a lot of these evaluations don't have minimum trading days anymore, so it just makes sense to just get them out of the way. So the kind of the logical scale up for me, this is a 50k top step. I'd like to build the buffer. I'm going to risk $500 a trade for the buffer, giving me a 4 trade drawdown, quite tight but doable, to build the buffer. Then I'm going to drop it to 333, so $333 a risk per trade once the buffer's made, so that gives me more like a 6 trade buffer, I believe. And yeah, which is I prefer. And then yeah, from there gets run-ups and payouts, and once I prove the concept, I can prove that I can trade and get these payouts, I'll scale up quite aggressively. I'll probably buy 3 100k alpha future accounts and full port them on CPI. Then once they're passed, obviously trade them correctly. And then once I've done that and I've proved the concept, I've got the buffer, I've made 1 to 3 payouts, it's time to go for the Apex. The Apex is where the big boy money's made, and I'll likely buy 50Ks to start, but then try get up to 20 as soon as I can, $1 million in funding, just with Apex, and then copy trade all the accounts. Again, that's a bit of a roadmap. I'd love to have that all achieved by the end of the year, because with that amount of funding, you can make very, very, very good money, like 50 to 100K a month. I say fairly easily. Obviously, trade is not easy, but you have the potential to make that type of money, and obviously that's alongside Forex and alongside my other company. So that'll be very nice, and I'll be a happy chap. But yeah, I hope you enjoyed that. I hope it made a bit of sense. I definitely, I understand these are probably quite hard to watch videos. They're long and I waffle on. Like, what are we now? This is one trade, and oh mate, I thought I weren't recording. Almost 26 minutes for one break-even trade. Most influencers take like fucking 3 minutes to explain their trades. But as you can see, a lot of thought goes into them, and I have quite what is that word? Methodological. Fucking hell. I have quite a strict process, and yeah, I'm very analytical. So yeah, I hope you enjoyed. I hope this wasn't too boring to watch. If you watch to the end, fair play to you. Big year ahead. Big year ahead. I'm excited and I'm grateful. And let's have it. I hope you all have a blessed year. I hope 2026 is a good one for you all. And yeah, I'm very grateful. I'm just getting into the swing of things. I have 2 months till I move to Australia, which is pretty crazy. And that's going to be pretty cooked trading times, but I'm going to firm it. And yeah, happy days. So I hope you're all good and all the best. God bless.